Hello and welcome to Traders Carnival from this beautiful and busy city of Bangkok. We are here for 4-day Traders Carnival, which is a residential event. It's organized by a group of traders for the traders, and we had an audience of 150 traders, mostly from India, but also from across the globe. So we'll talk about all the events that took place in Traders Carnival over the next half an hour. For now, let's go across to the main highlight of the event, James Dalton, the veteran trader from the US.
Trading is a business. And like any business, whether it be General Motors or Unilever, price is an advertising mechanism. Price advertises all opportunity. Time regulates that opportunity, and volume measures the success or failure of those opportunities. General Motors, Unilever, this is what they look at constantly. And it's the same concept with trading. Most traders don't understand that, and they chase price. And price is simply an advertising mechanism.
In stock market trading, or in any trading for that matter, what is the most important? Is it skill set? Is it being in the right trade at right time? Is it psychology, controlling your emotions? What is most important part?
I think it is a combination. We hear so often about the 80-20 rule, and I think 20% is learning how the market actually works. Once you learn that, 80% is psychology. We get greedy. And when we get greedy, we make mistakes. You're doing it for the wrong reason. It's in my first book, Mind Over Markets, talk about, shooting a bow and arrow at a target for a pot of gold versus just shooting the target. When all of a sudden there's a pot of gold in front of you, you get nervous and you do some things that we don't believe we're capable of doing.
Okay, the other thing that, a lot of viewers want to know is that when you were doing floor trading, you could see who's buying, you could see who's selling, and sometimes you'll know that, okay, if person A is buying or selling, if an influential person is buying or selling, that's going to take market higher or lower. How do you deal with that in electronic trading?
Electronic trading is, in my opinion, by organizing the information under the market profile, you can see the different behaviors. The day trader has one behavior. Short-term traders, which, people that have a lot of money, and they may be small hedge funds, they may be in the market for 3 to 10 days, their behavior is different. And then the very long-term money that buys and holds for a long period of time, they have a totally different behavior. And over time, you start to understand the different behavior. For example, when the day traders are dominating a market, they will go take the market to exact prices, exactly yesterday's high, exactly yesterday's low, exactly unchanged from yesterday. When you see that, you know you're competing against what we call the weakest hands traders, and they can be scared out of a position very quickly. Which happens all the time.
Yes.
I don't think it's uncommon to see the market get out of balance 3 times a day. Inventory gets too long, too short, too long. It's this constant movement back and forth. And about 85% of the days are rotational in nature. About 15% of the days are trend days. They move directionally all day long. So it gets started in every time frame going the same way. But it's 15%. About 85%, it's this constant rotation. Gets too long, gets too short. And people get trapped because they don't recognize the difference in the day.
So do you have any formula for stop? How tight or how wide your stop should be?
No, I don't. It would be far too complicated to discuss right here. I use the market profile to identify market structure. And I try and place my stops near some place that would violate the market structure. And I believe that the best way to control risk is to understand market structure and where you should place your stop. The worst stop you can use is just a money stop, saying, I'll risk this or I'll risk that. That's just a random event. And the second worst thing people do is they say, okay, they have a trade and the trade starts to work. They psychologically move their stop to break even. And that sounds sensible to them. It's actually a terrible thing to do because it's random. Where they got in has no importance to the market. But those are the things people do to help defeat themselves.
Well, that was James Dalton, a veteran trader, a successful trader, one who has made millions of dollars over his 40-year career. He's retiring, by the way, and came here to Traders Carnival just to give the knowledge that he has gained over the last 40 years. But that was James Dalton telling you how to trade. Next, we have Samir Arora, who will tell you how not to trade too often if you want to make more money. So here's some thoughts from Samir Arora.
Times are uncertain in the world more than in India. In India now we have this new uncertainty about how we deal with these treaties and all, because although today there has been not much of impact, but as it becomes closer to March of 2017, I think there will be many issues. But let's keep that aside, because maybe by that time there will be clarifications and people will be going to the government and asking for things, and then they'll realize it's much more complicated than just trying to tax somebody. But in general, I am and was more bullish in recent months, because I am betting, like everybody else, that monsoons will come and make a big difference to an average Indian life.
Just one more question on this Mauritius treaty issue. Do you still think that it's an overhang which is going to remain, which is going to become big as we move closer towards 2017? And do you think that the government will have a bit of a rethink on that?
No, there will be many questions and they have to resolve. The biggest question is that we are currently in a situation where the government wants to avoid, say, 10-15% traders or investors not paying taxes in any jurisdiction. But now I fear a situation where you may have to pay taxes in two jurisdictions, because when an investor, ultimate investor in a fund, pays taxes, but in India the taxable entity is not that individual but the fund. So how will the government of India give, say, tax certificates to an underlying investors whose names also they don't know, because the taxable entity in India is not those individuals but the fund in which they have invested. And it can't be a situation where they pay taxes in India, nobody gives them any TDS kind of a thing or tax, and then in their own jurisdiction they go and again pay taxes. This is a very mega thing, because I don't think this was the intention of the government to have people pay two levels of taxes without a set off.
Okay.
And it's a big...
and I believe that there will be some consultation on that.
But I think this is... Actually, theoretically, I think it's impossible to do, so let's see what solutions they find.
Okay, let's get back to the market. You said you are now bullish because you believe that monsoon, and you have been bullish. So in your fund, is it the highest net long that you have been in some time?
Highest net long was when Mr. Modi was coming to power in May 2014.
That's 2 years back.
Yeah, that was like 80-90%. Now we are around 68% net. Because right now also I feel that there are some sectors which are really not going to recover. So we are as excited about the shorts as we are about the longs in recent days and months.
Let me make an educated guess. Would the shorts be in PSU Bank?
No. Because if they were, I would not be tweeting on them. So from that you can imagine that I am not short on them, but obviously I don't have them on the long side. But in general, there are a few financials which may not be PSU banks, but they could be near PSU banks, as you may imagine. And then there are many other sectors, telecom, gold, many other things are there.
Okay, I think our viewers would know what stocks you're talking about when you say private sector banks, which are now being considered at par with some of the PSU banks. Samir, this is one question that I've always wanted to ask you. Something like an HDFC bank, which has created so much wealth for you, which has been one of your best investments. Has it saturated now? Did you see over the last 1 or 2 years it's not given anything?
No, it gives. Even this year it's up 4-5% while the market is down 1 or 2%. Basically it beats the market every year. Remember that in 2013 end, it reached foreign ownership limit. Before that, foreigners used to have in the index, MSCI India index, it was 7.5% of the index. So if India was getting $14-15 billion a year, $1 billion was in theory going into just one stock. Since that reached the foreign ownership limit, the stock has actually not fallen, has outperformed the market, and in addition, foreign investors who kept holding it have got a 20% premium, because the FI lot is at a 20% premium. Yes. So if you look at it over the last 3 years, we have made whatever it has made in India, which is better than nearly every other stock in a big picture sense, plus a 20% gain on the premium that it has picked up. So in fact, it is one of the safest stocks, because if foreigners were to sell someday, they have to first shrink that premium down to zero. So for an Indian investor, there is a 20% buffer against a foreigner selling that stock, because he will first sell at 20% premium, then maybe 19, 18, 17 has to go to par, and then he will in theory hit the local stock price.
So you are still bullish on
We are very bullish. Number one ownership.
Okay. What else are you bullish on right now? And your longs?
Our biggest longs are in financials and NBFCs. And I think basically, in NBFCs, the story is very simple. If the company has money, its debtors never default, because they know that if they repay, he will give it back. So in all these new IPOs, you know that they are lending very small amounts to the poor rural Indians at 9,000 and 10,000 rupees is the loan average. That person also knows that if I pay back this 9,000, these guys will give me 12,000. So as long as this fellow has the money to give, his NPAs will never come, because that guy will always pay him back. And this story will go on for a number of years, and then one day, maybe 4 or 5 years later, you'll realize that the rural Indian has been given too much debt or too much credit, and that these guys are not getting funded. But for the moment, the cycle is so virtuous that I think you can underwrite a 20-30% growth per annum, per quarter, every quarter over the previous year for like 4 or 5 years. So I don't think anybody will be able to stop their re-rate.
It's been a bottom-up stock because market index hasn't done anything, but a lot of stocks have done so well. Do you see that continuing, or do you think there's a bit of a risk in certain mid-caps now where we have seen so much gains over the last 6 months or so?
No, I would think that the index still may not move a lot, because there are still problems in these banks, PSU banks, in commodity companies. I don't think that these things have gone away. If these things were to go away, that means the world is in a very positive state of mind. I don't think that also is the state. So you still have to find within India stocks that you feel that within an Indian context have some business which is better or sustainable or underpenetrated, or in this case a technical thing. I think that financing is easily available for such businesses and NBFCs, so they can continue to grow and things like that, and also a little bit lower interest rates. But it's not that the world has totally healed itself and therefore everything has to move up. No,
final question then, Raghuram Rajan's term is expiring this year. There's a big debate going on in India. You have one political view saying that he should not be given a second term.
No, I don't think that is a political view. I think it will be deeply embarrassing for the government if they admit that on these kind of things they will not. It will be a huge negative if they don't.
You want him to be given a second term?
He has himself hinted that he's willing by saying that I have not been asked, so I have not decided.
No, but from market's point of view, do you think he needs to get a second term?
Yeah, absolutely, because you got a good guy. Why do you need to search for a potentially good guy when you have got a person who's already delivered and there has been no real negative from any global, local angle from the economy side? There's absolutely no. It will be a huge negative, not only from a stock market, but on how our government, in a sense, is not encouraging talent, promoting talent, and doing something not related to the job at hand.
Well, let's take a break on that note. But once we come back from the break, we'll have the core team of Traders Carnival. They'll tell you the concept of Traders Carnival, how it originated, how it's moved over the last many years, and what are the plans for next year. And I'll tell you something, on the next side of the break, we'll have some fun as well in Traders Carnival.